Good morning and welcome to another year of Subject to Finance. I've taken the last couple of months off, and so you won't have seen too much coming through in terms of Subject to Finance. And so I thought what I'd do as a way of sort of bringing everyone back up to speed and getting into it for 2024 was to just take a look at what we are actually thinking is going to happen in the year ahead. So there's a lot of discussion around things like rates and the economy improving in bits and pieces. So I thought let's just stop and have a look at some of those economic drivers, including growth and employment, tourist numbers, population and migration, property prices, interest rates, and get ourselves back up to speed with where we think we're going to be at. Okay, so let's start off with some of the bigger picture economic expectations. So these are not all my views. These are me just taking a look at what's been said by some of the commentators out there, including the banks, their economists, government economists, MB, OECD, economic outlooks, etc., etc. So I'm going to start with growth. So growth is just, are we going to grow as a company in terms of our net output, essentially? And I thought this is a good place to start, because at the end of the day, if we haven't got growth, then things like infrastructure and other bits and pieces that have been plaguing us for the last little while will continue to be a problem. So we've got to have growth at a revenue level, if we think of it that way, to fund what we need to do to grow as a country. So anyway, according to the OECD outlook, New Zealand's real GDP growth is projected to be about 1.2% in 2024. 1.2% doesn't sound a lot, and I guess the key point here is it's better than going backwards. So private consumption is set to weaken, and that's kind of the bit that's holding things back a little bit, and that is just because we've got less dollars at the end of the week to spend. And we're also expected to have a higher unemployment rate than we've had in the previous year. We saw yesterday that crept up to around about the 4% mark, and it's expected to go higher. You know, there's been a few out there that project it will head up into the 5s. But also growth is driven by economic activity, and I guess from a global point of view, there is still pressure. China's got an economy that's under significant pressure. The European Union still has its issues. The US is sort of doing okay, but it's got elections and bits and pieces to go through, and it's funding other people's wars to some degree. The OECD report says that demand is resilient, and I think from that point of view, New Zealand is looking actually not too bad at a global level. I think potentially where we are at the moment is we're realigning to a new world sort of situation, and we had that sort of export focus on China for many years, for much of the last 20 years, and we're having to sort of shift and think about where growth is going forward. So you're hearing a lot of discussion at the moment around India. I'm sure that could equally mean India, Indonesia, Philippines, those large emerging economies that are actually showing strong growth are probably going to be our trading partners as a country for the next 20 odd years. And so we've got to move away from the mature countries, and China has become one of those now, to more of a focus on some of those high growth countries. So that's what we're hearing and probably likely to see more of from our government. The new government's talked a lot about India. I'm sure we're going to see some of those ASEAN countries, including Indonesia and Philippines, pop up into that mix at some point. So I think at a growth level, the things that are really going to make a difference for us this year are how well that Chinese story plays out, because at the end of the day, from an export point of view, it's a huge trading partner for us. And if China's not doing well, then Australia's not doing well, and Australia is still our strongest trading partner. So there's a lot in that basket. But on the positive side, tourism is looking good, and so I'm going to jump into that now. According to the MB, the Ministry of Business and Innovation and Employment, those visitor arrivals are expected to grow at about 4.6% this year, reaching about 5.1 million visitors in 2024. And that's up from 3.7 million before COVID back in 2017. And that total international spend is expected to reach around about 14.8 billion. So that's great for New Zealand. And we've seen that this summer. You know, if you go to any major city in New Zealand, we're starting to get a bit of a buzz back. You can see the tourists on the streets. Hotels are starting to pick up in terms of occupancy. And that isn't just the Queenstowns and Rotoruas. You're seeing that across the country. So tourism is back. And it's pretty strong at the moment. We're probably as weak as we haven't quite got that Chinese market back, but on the flip side, we're seeing sort of stronger traction out of North America and other places that we didn't potentially have before the COVID phase of things. So that's a positive. The Tourism Export Council is also relatively bullish in terms of its expectations, and I think we can say that this summer is supporting the view that tourism's well underway and the recovery of it's going well. And so where some of our other industries are down, and that's things like the construction industry, we're hopefully going to see some of that job shift over into things like tourism, which are on the up. So that's good. I'm going to look at population next. I couldn't find out much in the way of forecasting, but we know, and it's been talked about a lot, that we had well over 100k in terms of net migration last year. And New Zealand is still an attractive country in terms of migrants. We've got a new government, and whether that mix is going to change in terms of focus is hard to know just at this point. But I think it's safe to say that we're going to see a continuation of the trend in terms of working migrants coming in, and that will be dominated by the countries that have that type of migrant, and that's the Indian migrant area, the Filipino migrant area, other Southeast Asian countries, and around the fringes I think we'll continue to see those looking for lifestyle coming out of North America and Europe. I think one of the things that we've seen over the last year or so is that Latin American migration into New Zealand has been on the increase. I think it's a logical thing that will increase. You know, countries like Argentina and Chile haven't had great economic circumstances in the last few years. They've got good educated populations. Whilst they're largely Spanish speaking, with Brazil obviously being Portuguese, they generally have good English skills, and so I think we're going to see some specialised migrants coming out of those areas, and we've seen that over the last few years with people coming into things like tech roles, marketing roles, and I think we'll continue to see that. The other thing with migrants is that those that have arrived in 2023 will continue to settle in. So we had that 100-odd thousand people coming in. They've got to find jobs and find their feet. And so in terms of some of the things that create that sort of economic driver, you know, you could expect that they've come in as renters, they'll find a job, they'll invest in their first property, and so on and so forth. So it takes time for some of that impact to roll through in terms of economy. And I think it's going to shore up things like the housing sector, the construction industry over the next couple of years. And I believe there is still a backlog coming through of applications that didn't get processed throughout COVID. So we're going to see that lag continue for a bit to come. That sort of leads on to what effect that could have on property prices. And so I'm going to talk to a little bit around what we could expect in terms of housing prices for 2024 now. So there's a lot of commentary around this. Tony Alexander, who's well-known independent economist and talks a lot to the property sector, expects that house prices will be up by 10% in 2024. And we've seen Westpac and Kiwibank economists come out with a range of 7 to 8%. So I think somewhere there in that sort of 7 to 8% probably makes sense. Maybe 10's a little bit high. At the low end, we've seen CoreLogic with a lower, sort of more moderate forecast of 5%. So I think, yeah, my expectation would be that we're going to see, strong growth over the last year and some recovery in terms of those valuations. The other thing that I'm seeing from economists is they're still worried about our ability to build properties fast enough. And one of the economists that I follow, which is Jared Kerr from Kiwibank, he's come out a few times and said that as a country, we're still not able to build houses fast enough to sustain that sort of growth that we've got in terms of net migration. And I think that's our problem at the moment. We've sort of got this ebbs and flows piece rather than a consistent flow of migrants. So it is possible that we'll go from what was the lowest sort of sales market in terms of houses in 40 years, which was last year, to a market where we've got a shortage again in a pretty quick phase. It could take 1 to 2 years, but it could happen pretty quickly. And if we think about where that average is sitting, we need to see around 95,000 houses on the market on an annual basis, and we need to see that sort of growing in terms of a stock at least 10% per annum. So it's a hard one to keep up with. To get into that housing market, obviously you need funding, and that's where interest rates come in. And interest rates have been used heavily over the last 18 months as a tool by the Reserve Bank to moderate inflation, to sort of dampen down the market. And so it's been very effective. We've seen a real estate market in the last 12 months that we haven't seen in 40 years. And that's rolled into a definite effect on inflation. We've obviously seen that coming back. We've seen the international inflation piece come back, which is inflation related to what happens outside of New Zealand. And while domestic inflation hasn't come back so much, that's probably been influenced by things like minimum wage going up and that generally supporting that inflation number in terms of our local or domestic inflation. What are we going to see in terms of interest rates for 2024? Well, it's a question that we're getting asked a lot, and it's a hard one to sort of pin down. If we look across the economists in terms of the banks, we have a range of sort of views, but generally it's that we're going to see rates start to come back in a more serious fashion in the latter half of this year. We are seeing the long end of the rates coming back already, and if we look at swap curves in terms of the forecast of interest rates into the future, the longer out we go, the more we see that curve coming off. So we have seen both prior to Christmas and post-Christmas banks starting to cut back on some of the 2 to 5 year fixed rates, and we'll expect to see more of that. We haven't seen too much happen with 1 year rates just at this point, but we'd expect to start seeing that mid to late 2024, and that's pretty much been reflected by the views of all economists across all banks, and it matches what we're seeing in the swap rates themselves. So interest rates appear to have peaked and have started to come off, and we'll hopefully see more of that in the year ahead. Now, I don't think we can expect to see rates come down at the speed that they went up. That's just not going to happen. We might see 10 basis points here or there, and it'll be interesting to see how that correlates with the OCR. When the economists talk about rates coming off, they always sort of benchmark back to when do we think the OCR is going to start to come back. I think they're two different things. Wholesale market in terms of offshore market for funding for our main banks is coming off, so that's reflected in their market pricing, and they've brought both home rates back a little, and they've brought term deposit rates back a little as well. So that's kind of what we can expect to see going forward. It's not going to race down, but it'll gradually start to come back a bit. Where will it come back to is hard to know. I mean, I think actually it could come back to a fairly low base at some point, because I don't think we're going to see the sort of inflation that we had creep in through COVID, which was driven by sort of helicopter money being pushed out into marketplaces by reserve banks to try and sustain them through that COVID period, and supply chain issues at a global level through COVID. So those things created major inflationary issues, and that sort of bubble has flowed through. Potentially we're back to more of what we were seeing before COVID. Whether it will go as low as it was is hard to know, but there seems to be surplus money and lower activity, and that could create sort of more of a stagflation type thing going forward at a global level. So my kind of feeling is that we're going to see rates come back to a lower base again. Whether it's as low as it was, probably not, but it'll be relatively low in my view longer term. So that's interest rates. And I've talked about that inflationary piece already. It seems to be under control. Most of the different economies that we look at seem to have done the same thing, pushed interest rates up. And, if we look at the US, the Fed is expecting 3 cuts in 2024. So, it's probably a little ahead of where we're at. US inflation seems to be under control now. Australia is expecting 2 cuts in 2024 in terms of its central bank rate. Its unemployment is higher than expected, so it's probably seen a little bit more unemployment than it expected, whereas we've seen a little less. And growth has declined in the Australian market, and probably again greater than was expected by its reserve bank. So good indications in the Aussie market that its inflationary issues are under control, and probably a little bit harder impact than what they were expecting over what we've seen. Most of these economies that affect us are going to stay at restricted levels through 2024. I mean, the dialogue is still fairly muted from all of these central banks. The one that we don't understand is China. Not even our economists in New Zealand really understand what's going on there. The data isn't ever great out of China. It's, at the end of the day, a single party system, and they control the narrative. How that'll play out is really hard to tell, but it will affect us if it stays demure for long. And things like the Israel-Gaza issue are going to play into what happens in the Middle East, and those sort of little uncertainties, like with Russia and Ukraine, will keep things dampened, I think, for much of the year ahead. But I think the good news there is that for most homeowners, they won't see interest rates pressure as much over the year ahead. They should start to see it coming back. A good chunk of that market has rolled through its rate rollovers and is now up in that sort of hefty burden in terms of paying for interest on a monthly basis, so we shouldn't see too much pain coming there. We could expect to see unemployment rise, particularly as government puts pressure on costs, as central government and regional government do that. We might see job layoffs, and so that unemployment number is likely to still rise for a little bit. So that's a quick sort of snapshot. In terms of overlaying that to where I see the banks just at the moment, or the major lenders, including non-banks, I think we're actually in an interesting position when it comes to them and their balance sheets. They've been through a period where not much has happened. We haven't had growth. In the last 12 months, we've sort of seen new residential lending of sort of 60 billion-ish. whereas in the prior 12 months or back in 2021 we were up at 95 billion. So we've seen a huge drop in the growth in terms of that home loan space, and that's the backbone of all banks. That's most of their balance sheet. And so what we could expect to see is that that along with the ongoing repayment of debt, and we've been in very much a repayment cycle, which is what happens in down cycles. People repay their loan, they don't go to take on more debt. So you put that together with a lower activity level in the real estate market, and I see all the banks starting to look to fight for market share this year. So what does that mean? It'll put pressure on them to keep an eye on those rates and get them down. I think we'll see more special rates. I think we'll see more cash incentives. And I generally think that we're going to see them working hard to try and make credit work for the likes of first home buyers, because they need to maintain balance sheet, if not grow it. Or perhaps the other way around, grow if not maintain. So yeah, from a banking point of view, I'd expect to see a pretty competitive market in the year ahead, which I think is good for consumers. So in terms of real estate, and for those real estate agents out there, your buyers should be able to find finance. That's the key point. Believe me, when we look at what lenders have been doing, they're trying to make it work for people. So the biggest issue we've seen is obviously the devaluation of property for existing homeowners, making it a little bit harder for them to do things, and then just that cost of living piece for first home buyers. But there are ways to make it work, and there are still people, in fact it's a record year in 2023 for first home buyers getting into the marketplace. So I think we're going to see more of that, and I think we're going to see investors come back into the market. We've got those initiatives coming through with this new government in terms of rollback of some of the measures that were put in place under the previous government, and I think that'll give some surety to those wanting to invest into real estate in New Zealand. So that's my overall feel for 2024. I've tried to base it on what I've seen in terms of those economists out there that look and live and breathe this on a daily basis. But generally I think the picture is good for 2024, albeit there'll be a few problems around the edges with the tail of unemployment coming through and businesses still struggling a little or coming to the end of the road in terms of cash flow and failing. So I don't say that it's 100% positive this year. I still think we're going to see some failures and some more unemployment coming through, but on the whole I think we're going to see a much more energised economy than what we've seen last year. Anyway, have a great week, and look forward to seeing you again next Monday. We've got some panellist stuff coming up in terms of making this a little bit more interesting, and so I'll introduce some of those to you in the week ahead. Talk to you more soon. Bye.